Hello and welcome. You're watching the Business Today show with me, Sakshi Batra. First up, the top news we're tracking for you tonight. Bloodbath on D Street. Nifty and Sensex plunge around 1.3% each. Losses extend for the fourth straight session as tensions in West Asia show no signs of abating. Only M&M and Bajaj Finance defy the slide in Nifty 50 stocks. US bond yields cross 5% for the very first time in 16 years as investors rule out a dip in interest rates anytime soon, likely to suck in more money from stock markets as returns rise. Impact on Indian markets as well. Another unicorn IPO lined up for next week. Mamaearth parent Honasa likely to raise 1,700 crore rupees from the primary market, could be valued at $1.25 billion. Government cracks down on errant coaching centres. Penalties of 1 lakh rupees imposed on 3 IAS coaching institutes. Notices sent to 20 more institutes for misleading and deceptive claims. Big names like Unacademy, Byju's IAS, Drishti IAS, Vajirao and Reddy Institute also under the scanner. Auto sales records expected to be broken this festive season. We bring you a conversation with industry insiders on the discounts, deals and expectations on these 31 days. As preparations get underway for Budget 2024, an exclusive conversation with the top taxman of India. The CBDT chairman talks about the contours of taxation and an impact on real money gaming and the cryptocurrency industry. Is Foxconn being punished for its move into India? China slabs tax audit and other cases on the Apple iPhone manufacturer. Analysts say China's threat is either you stay with us or leave us. Well, this festive season is already underway and could be the best ever for the auto sector. Stock markets couldn't seem to agree more, with auto stocks hitting new regularly highs with over 30% returns on a year-to-date basis. In fact, the Nifty Auto Index is also among the best performers for this year, and all the Nifty 50 auto stocks are actually trading above their 200-day moving averages as well. So what good news is this season about to spring in? Let's find out in conversation with industry stalwarts Shashank Srivastava, Senior Executive Officer of Marketing and Sales at Maruti Suzuki, and Manish Raj Singhania, President of FADA, who both I spoke earlier to. The festive season is already underway and could be the best ever for the auto sector. Stock markets couldn't seem to agree more, with the auto stocks hitting new highs regularly. With over 30% return on a year-to-date basis, the Nifty Auto Index is among the best performers this year, and all the 15 Nifty auto stocks are also trading above their 200 days moving average. So what good news is this season about to spring in? Let's find out in conversation with industry stalwarts Shashank Srivastava, the Senior Executive Officer of Marketing and Sales at Maruti Suzuki, and Manish Raj Singhania, the President of FADA, joined right in. It's great to have you both with us on Business Today Television. Festive greetings to both of you. Mr. Srivastava, let me kickstart this discussion with you first. How has the festive season already begun for you, the 5th day of Navratris? The largest car maker of India you are. How have you seen, is it a dhamakedar start to the festive demand?
Well, I would say it's not really a dhamakedar sort of start, but it's reasonably good. We are above the last year's numbers. Remember, the last year, the early days of the Navratra were actually at the month end also. And as you know, in the auto industry, the month end retails are really large because of closure of finance cases and other schemes which customers go for. So I think in light of that, it's been a fairly good start. And by the way, the festive season actually starts from 17th August in our countries, with the Onam festival starting in Kerala. That was 23% up. And I think going by the current sales, I would expect 1 million figure to be breached this season in the industry in the festive season.
All right, 1 million figure to be breached this festive season. That sounds good already. Mr. Singhania, welcome to you as well. How do you foresee the entire season's festive demand? Do you also hope to see some record sales by Indian auto industry this festive season?
Yeah, so definitely auto industry is on a bull run kind of with the start of festive season. As Shashank quoted, last month was Onam, and we had this Ganesh festival, and that responded pretty well with overall industry growing by almost 21%. And for PV sales, the September month was ever highest retail for individual September month. So every month kind of in auto retail, there's a new record created, and every month, and in the subsequent month, that record is broken kind of, So it's all positive. I mean, supplies are better this time. Vehicle availability is good. A lot of things seems positive, and we are very optimistic about the festival season. That overall across segments, whether it is two-wheeler, has responded pretty well last month. It was not performing well, and dealers were worried a lot in two-wheeler segment. But that also grew by almost 22% last month. So overall, a very optimistic festival season for auto dealer community.
Okay. Well, on that note, thank you so much, Mr. Singhania, and thank you so much, Mr. Srivastava, for being with us on this edition, helping us understand what do we expect from the larger auto industry this festive season. And again, season's greetings to you both. And we shall catch up again to understand more about how the sales went by during this peak period as well. If Toyota has its way, then you could be paying much lower taxes on the hybrid vehicles. Remember that Toyota is reportedly lobbying with the government to cut taxes on hybrid vehicles by as much as 1/5. In a letter to the government, the company has argued that hybrids are far less polluting than petrol cars, but do not get any tax benefits. While both Toyota and Maruti have focused on hybrids, the government is offering millions of dollars in incentives for electric vehicles and batteries. The tax on electric vehicles is just 5% when you compare it to 43% on hybrids. For more, we are now joined by Business Today Television's Danny D'Cruz. Danny, tell us, what does Toyota really want from the Indian government?
Toyota is essentially asking the Indian government to reduce the taxes on hybrid vehicles. Currently, the taxes on hybrid vehicles is around 43%, which is around the same as on petrol vehicles, which is around 48%. Now compare that to EVs, the taxes on EVs is just around 5%. So the argument here by Toyota is that while hybrid cars provide a lot less emission compared to petrol cars, they do not get the same tax benefits as EV do.
All right. Thanks a lot, Danny, for all that update. Well, India's headline inflation is likely to remain within the target range this fiscal year. According to the Finance Ministry, the country's fiscal position remains solid, with revenues generated from both direct and indirect taxes showing steady growth. This, according to the monthly economic review for September, displays strong economic activity and a broadening tax base. The report also says that headline inflation is likely to remain within the target band due to the fall in the core inflation. The report, however, flags some of the risks, which include headwinds from low rainfall and geopolitical developments. And one of the world's biggest Apple iPhone suppliers is now facing a tax probe in China, reportedly for political reasons. Now, shares of Foxconn tumbled by as much as 5% in trade in Taiwan today. And this comes after China's state-owned Global Times said on Sunday that some of Foxconn's key subsidiaries in China were the subject of tax audits. And experts are citing elections in Taiwan and Foxconn's move to India as main reasons for the action against the company.
Is the world's largest contract manufacturer paying for a gradual shift to India? Has Foxconn's decision to make India a production hub made it a target in China? Or is it the elections in Taiwan which has subjected Foxconn to a tax probe? These are the questions being asked as China opened a probe into Foxconn's tax filings and also its land use in Henan and Hubei provinces and elsewhere. According to reports, several companies had been audited by Chinese authorities in recent months, but Foxconn was the only one named, probably due to political reasons. The tax audit comes less than 3 months ahead of Taiwan's presidential election and amid Foxconn's diversification drive to move some production out of China. Foxconn employs hundreds of thousands of people in China and is a major investor there. Reports say the tax audit could be a warning to Foxconn, which has been shifting some of its production lines, including those for iPhones, from China to India. With the Chinese economy struggling to rise from the draconian COVID lockdowns, analysts feel that China wants companies to take a side, indicating either you stay with China or leave. Also muddying the waters is the candidacy of Terry Gou in January's presidential elections in Taiwan. Gou is the founder of Foxconn, who stepped down as the company's chief in 2019. His ascendancy to the top post in Taiwan could pose more problems for the company. Foxconn in a statement said that legal compliance was a fundamental principle of its operations everywhere and that it would actively cooperate with the relevant units on the related work and operations. Foxconn recently tied up with chipmaker Nvidia to announce a smart car which will use artificial intelligence to learn from experiences and keep updating constantly. Though not confirmed whether this could be the car, Foxconn had earlier announced India as a plant production hub for its electric cars. Bureau Report, Business Today Television.
Well, domestic equity markets crumbled today after opening with marginal gains. A combination of higher bond yields and risk of a wider conflict in the Middle East soured the trading sentiment, and that's across the globe at the start of the week. While traders awaited earnings from some of the mega cap companies and the key data as well, all of these factors pushed global shares down to 7-month lows. BSE's Sensex in India crashed 826 points to settle the trade at 64,571, while NSE's Nifty 50 tumbled 261 points to end the day at 19,281. And with this, investors lost a notional wealth of 12.79 lakh crore rupees in just a single trading session. All the Nifty 50 stocks ended in the red today except for just two stocks, M&M and Bajaj Finance. M&M ended the day with 0.1% gains, while Bajaj Finance ended just marginally higher with just about 0.07% of an uptake. On the Nifty losers front, you did have LTI Mindtree as the top loser, followed by Adani Enterprises, Hindalco, JSW Steel, Adani Ports. All of these stocks were falling anywhere between 2.5% to 3.5% in trade. Well, preparations for the budget 2024 are already underway, even though the one being presented on the 1st of February will be an interim one, with general elections slated for April to May this year. Business Today Television's managing editor Siddharth Zorabi was in an exclusive conversation with the chairman of Central Board of Direct Taxes on what the contours of the new taxation policy could be. And here's an excerpt.
I want to begin by asking you to talk about something that comes up very frequently in all discussions with regard to taxes, and this is how the new income tax regime is doing, how many taxpayers have sort of shifted to that regime, and what are the benefits that are coming to them. I thought we start today's conversation with that question for the Aam Aadmi.
Good afternoon, Siddharth and the viewers. The new regime, I will say a modified form of new regime, was introduced by the Finance Act 23, and it will be, the first return will be filed for assessment year 24-25. That means to say we are still about a year for the returns of income to be filed therein. As you are aware that in the modified new regime, the default mode is the modified new regime where there are no deductions or exemptions, and the taxpayer has a liberty to switch over to the old regime as well. So the real number of people who are switching to the new regime, modified new regime, will be known after the return filing season in July 24. But we are quite hopeful that the numbers would be quite encouraging, and it may be between 60 to 70%.
Do you think the objectives with which the corporate tax rate was cut a few years ago have been achieved?
Yes, I think this is the objective was to simplify the regime, and that has been there, and more corporates are opting for this. On a macro basis, we did some analysis at the finance bill stage in 2023 finance bill stage, and we had seen that around 60% of corporate profit had shifted to the new regime. So we are quite satisfied with the overall progress in this area.
Mr. Gupta, as far as personal income taxes are concerned, you know that over the last 2-3 years there has been a consistent demand from a certain section of society on account of inflation and other cost pressures that personal income taxpayers should also get some relief. I know the budget is still a few months away, but what would you say to those concerns that are expressed from time to time?
See, the concerns were examined in great depth and detail at the stage of budget exercise for 2023, and you have seen the modified regime for the individuals and HUF and this sort of the taxpayers, and we had reduced the surcharge as well. So the peak rate has come down to 39%. I think we are taking care of the entire basket of people, and the government is very conscious of the duties. So that is the position as of now, and let us see how the budget exercise moves on for the 2024.
In personal income tax collections have grown almost near 29.5%, and we spoke about corporate tax growth as well. But can we expect anything to happen in the next budget? Because some people would say that it may be an interim exercise, and therefore one should not expect any major changes as far as tax are concerned.
Budget exercise has just commenced, and we are at the discussion stage. Let us see how the discussions move further.
Well, I was hoping, and I know that you cannot reveal what the budget may do, but at least for some Diwali cheer, that's why I posed the question to you. There have been some changes, in fact significantly so, for the gaming sector. Would you like to explain, as far as the tax logic is concerned, what is the intent and what do you see eventually happening? Because on one hand, the industry says that it will lead to reduction in business and therefore in a way revenue foregone for the exchequer.
See, gaming industry, as we had discussed when the budget announcements were made in 2023, there was an overall of the gaming taxation regime for the winners, and we came out with a altogether a revamped methodology of taxation of the winnings, as well as that how the deduction of tax has to be made on the winnings made by the players. So we had come out with a very comprehensive manner, what way the deduction is to be made, what way the taxation is to be done, and we then followed it up with the circulars to explain the methodology in which way it is the gaming companies can apply to it. And so as far as the direct taxes are concerned, we have given a complete package to the gaming companies and the players who are winning the games or losing the games. So that is already there, and we are witnessing good traction. About 600 crores of taxes have been deducted by the gaming companies and have been collected by the government. So as far as the gaming companies from direct tax side are concerned, we have given a very good methodology to them, a litigation free regime in a way, So that is the position for so far as direct taxes are concerned.
Mr. Gupta, what is the experience as far as crypto taxation is concerned? Because overall volumes seem to have reduced, Mr. Gupta, as far as crypto trading volumes are concerned. But the taxation on virtual digital assets, has it led to a decline in collections?
VDAs for the taxation regime for virtual digital asset was announced in Finance Act 22, and this is there as of now. And there is a moderate collection vis-a-vis the gaming companies. We collected around 100 crores in this past 6 months by way of TDS. But I will not be able to comment and give anything in what way it has moved. I don't have the data right now onto that.
Well, that's all for tonight's show. Many thanks for tuning in, but do stay tuned on to India Today as well to catch all the updates from the world of